Markets do three things. They break out and trend, break out and range, and break out and reverse. And this breakout pattern is very good because you don't need to know where the market is headed. You just need to wait for the breakout. Let me explain it to you. If you're new to the channel, subscribe. I also have a free mentorship program. Link will be in the description after the video. Go check it out and let's jump into the video. Now, the breakout pattern. First of all, we need to know the significant levels. Where exactly are we looking for these breakout patterns? Now, the high of week, high of day, high of month, and the high of previous months and lows. These are areas where markets tend to react off of very, very well. So, for example, if this is the high and this is the low of the month, then we can expect a very good reaction above that level and below this level. That is step one. Step two is understanding the signals. Now, the signals will either appear at the high or the low of the week. That is very important. High and the low of the week. And then we can also look for the signal at the high of the day, but it's conditional. So say for example, this is the high and the low of the week, and the high and the low of the week is set on Monday. So when Monday finishes setting the high and the low of the day and closes, we have a new high and low of week. So on Monday, the high and the low of the day is also the high and the low of the week. Meaning you can look for your signals at the high and the low of the day on Monday. But also, the direction of where the market is headed on Monday is usually affected by how Friday closed. And I will explain that in a bit. Now, on Tuesday, you can see we have high of week, low of week, failed breakouts or breakouts. On Tuesday, the market can break out and close outside of the range. The range of Monday's high and low of Monday. This is what we call a breakout. Now, the market can also break out and close back inside of the high and the low of the week set on Monday. This is what we call a failed breakout. Now, a breakout tells us that let's look for an opportunity to continue with that trend. And a failed breakout tells us that the probability of that trend continuing is very low, and for it continuing to reverse is quite high. So those are the signals, and they appear on the high of the day, high of the week. Now, these are 24-hour signals. So the day close is what tells us what will happen the next day. So, and you can see, say now this is Monday sets the high and the low of the week. Tuesday we break out. Wednesday we continue with the trend. Or Tuesday failed breakout. Wednesday we continue with the reversal. Now, timing. We don't trade willy-nilly any time of the day. The timing window for each session is 2 hours. So, in Asia, it's 9 to 11 p.m. New York time. London is 3 to 5 a.m. New York time. And then New York is 9 to 11 a.m. New York time. These are the times that we look for our signals. If no signal, we wait for the next session or the next day. And then the daily signal is in that timing window. So in that timing window, we look for the high of the day and then wait for a breakout. So the daily signal is a breakout of the high of the low of the day. Before we continue to that, let's look at an example and then we shall apply the daily signal. So GBP USD gave us a very good setup on Friday. Now, let's break this week down. We are using the 15-minute time frame. So we have Monday setting the high and the low of the week like that. On Tuesday, price breaks out and then closes back inside of the range. We have a failed breakout. A failed breakout at the high of the week tells us to sell the next day. And so the next day, when we come to the screen, in our timing window in the London session, so the pound, euro, those I trade in the London session. It's from 3 to 5. All right. Now, when I come to the screen, I am coming at exactly 3. And what do I look for? The first thing is the high. Where is the high of the day? Because if I want to trade, I want to trade at the high of the day. If I'm selling at the high of the day. And so the daily signal is a breakout. So on the 15-minute time frame, I just wait for the breakout. And the first candle in that timing window is the breakout. Now, I go to the 1-minute time frame. Now, let's add an indicator, moving average. And it's at, let's set it at 20. So this is a 20 moving average. Now, here's the thing. We are looking for now a pattern at this level. And then the breakout of that pattern. And so, when I look at what the market is doing, we are looking at a place where we have support. So, the market broke this level. This is now the new high of the day. So market broke this level, it became support. So it was resistance, support, continued higher, it came down, and we have this like a head and shoulders pattern. Now, the moment we break this structure now, then we have a reversal pattern. And we've already broken out. So my entry is at that level, my stop loss above that level, and then I am targeting this low. Now, keep in mind that we need to see an area where we can target. So a 1 to 2 is good. We have an area where price might come back to. We have a pattern at that high, and we've broken the 20 moving average. So yeah, right, let's play it so that it goes faster. And so, anyway, you've seen it. It was a winner. We continue. All right. So the next day, on that day, this is very interesting. On that day, this is the low of the week set on Monday. Price on Wednesday breaks out and closes outside of the range. This tells us that we have a very high probability of price continuing in that direction. So if I'd be looking to trade, I would be looking to trade at the high of the day again. Now, we never got the breakout, so I wouldn't be interested in that. Then we wait to see how this day. Now, we broke out, but it was outside of our timing window, so nothing really for us. And then we broke out and closed back inside of the range. Now we have another failed breakout. So after another failed breakout, then I would be looking to buy on Friday. Simple. Now, in my timing window again, from 3 to 5. Like that. And so, when I come to the screen, where is the low of the day? This is the low of the day. Alright? I want to see a breakout. And then in that first candle, we have the breakout. When I go to the 1 minute time frame, I want to see a pattern. And you can see that this is an area where price is trying to reject. So we can have an area there. Let's see the pattern that forms. So price continues. We have another area where price is reacting to. So we have some kind of a rectangle forming. Price continues breaking down. Again, we are looking at all these patterns. We have another consolidation here. Now we can use also the horizontal line and put it there. We see prices bouncing off that area. And so the moment we broke that level and we closed above the moving average. So we have a pattern here. This is like a triple bottom. Yeah, triple bottom. And then we break. This is my entry. Stops above the below that level. We also have a very nice trending move down where we can target. So we can target this high here. And so the moment price breaks out of this pattern, that's it. You get in and you let the market do its thing. So that is the breakout pattern that has changed the way that I look at the market, and it works on all time frames. It's just, I'm using the 1 minute, you can use the 5 minute, I've been using the 5 minute. It doesn't matter. So long as you understand price action, you understand there's a pattern, and then significant level, break of structure, breaks into the moving average, then you have yourself a nice setup. And if you want to learn more about this strategy, check out the link in the description. The free mentorship, it's free, check it out. And if you got value from today's video, subscribe, and I will see you in the next video. Peace out.